Thank you for tuning in. This is Ken Lake with MAC with tonight's technical update on the markets after the USDA crop report here on Wednesday, October 12th. Actually, USDA's numbers today weren't damaging, fairly neutral for corn and wheat, and maybe a little bit supportive in soybeans. And right after the report, we saw markets a little firmer. But at the end of the day, we saw markets sell off, 10 in the corn and beans and about 10 or 11 in the wheat. So let's take a look at November beans to begin with here. We see we still traded below this 20-day moving average that I've been talking about, 959. Closed at 953 with a low at 943, support 938. Stochastics selling off here a little bit. I still think we have some risk that we test this 938 number here in November beans, and if we want to blow through it, we'll go lower. Also note for Southeast Michigan that the Toledo market is getting pretty jammed up with soybeans, so basis levels locally are a little weaker than we might have expected. If you can avoid selling into this weaker basis for 2-3 weeks, it might be the thing to do. So seek out some DP to see if you might even want to store beans here for a month or two to get by this post-harvest klutz. But it looks like we've got a fairly significant problem here in Toledo. Wanted to switch to a weekly view here and excuse the pop-up that I just can't seem to get to go away here. Take a look at the weekly view in soybeans, and you'll notice where we are here. Downside support in weekly beans at 844, so almost $1 a bushel under where we are today if we wanted to go lower, but a very, very oversold market. So I'm going to stick with my ideas that we're probably not going to go that much lower. We've got some bearish tendencies here to turn lower if we see this 100-day moving average move below the 50. But actually what we're seeing is 20-week moving average moving above 100 and a 50-week moving average coming up to move above. So a longer-term friendly view here. So I think soybeans probably are going to be okay in here. Hopefully I can get this pop-up to leave, but it doesn't look like I'm going to. Anyway, D's corn closing tonight, 396. Still pacing sideways, tracking this 401 moving average, momentum indicators sideways here, basis levels okay, demand's pretty decent, but once again we're in for a 3 or 4 week term of just kind of a sideways market here with the tendencies, because it's harvest time, to trade a little lower. We'll see what happens there. We've pretty much told customers to avoid sales, try to squirrel this stuff away, wait for a post-harvest rally where we see both basis improvement and probably a little bit of Chicago improvement altogether.